It's time now for an in-depth look at the global markets, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Kiwoom Securities. Mr. Yu, thanks for coming on again today.
Thank you for having me today.
So Wall Street was down on Wednesday across the board, again on the China situation. Take us through the trade there.
Sure. Possibility of U.S.-China trade war lasting for a long period of time is affecting clearly negatively on the global equity market, including U.S. U.S. market, Dow was down 0.39%, S&P 500 was down 0.28%, Nasdaq was down 0.45%, and small cap was down significantly by 0.83%. There's continuation of fight in regards to the U.S.-China trade negotiation. There was issues about Huawei, as well as additional Chinese companies' theft of the technologies. It continues to be the key concern about the market. Also, dovish comments coming out from the Fed minutes have somewhat eased the concern a bit. Yesterday, the market had come off a bit from the bottom, the lows to the slightly higher. But nevertheless, the market was down continuously for the next few days, several days. Also, for Kospi, continuation of this concern about the U.S.-China trade war, it was down 0.26%. As for the small caps of the Nasdaq, it was down 1.42%. Clearly, the concerns with the China, with the U.S., is putting the heaviest burden for Chinese equity market. Once again, it's down today about 1.36%. As long as the negotiation is not agreed upon, we think the pressure on Chinese market will continue in the future.
Right. Well, you mentioned the Fed. The American economy seems to be doing quite well these days. In the minutes from the Fed's latest meeting, we see it's probably going to let things ride for a while and keep interest rates at their current low level. How's the market reacting to that?
Right. Because of that, I think the U.S. market seems to be fairly stable relative to most of other countries. The Fed Reserve policymakers have said that they will be patient in regards to the policies of monetary policies, and they will continue to keep the current rate of interest rate for a while, despite that the economy might be recovering. Fed kept its benchmark rate at range of 2.25 to 2.5%. At the conclusion of today's policy meetings on May 1st. Members have observed that the patient approach is determining future adjustment to the target range for the federal funds rate would likely remain appropriate for some times. I think that despite the concern of the muted pace of inflation of 1.6%, according to the most recent reading, the Fed is expected the core PCE price inflation to move up slightly in the near term, slightly below 2% target, but nevertheless it might be moving up. So because of that, the chance of U.S. Fed lowering interest rate is not here yet. But if the continuation of U.S.-China trade dispute happens, then the chance of the Fed lowering interest rate will be increasing in the futures. Once the Fed lowers interest rate, despite the rising inflations, we think that it will be very difficult for China to win against the U.S. in regards to trade dispute or trade war that we are looking at right now.
Interesting. Well, elsewhere in the EU, member countries are holding elections for the European Parliament. Britain, now 3 years since the Brexit vote, is still a member, and Brexit is still an issue. Is the EU election something investors are paying much attention to?
Yes, in a sense. The European Parliament elections, which will take place of the European Union, EU, will kick off on 23rd, starting with England, UK, and Holland. The election is expected to be a crucial factor in deciding the future fate of the EU, beyond simply choosing members of the EU Parliament in terms for the next 5 years. The EU will vote to elect 751 lawmakers to form the European Parliament. Most of the countries will be coming into this vote. This will be very important because the 9th European Parliament elections, this is the first time since the European level, pan-European levels after the European refugee crisis in 2015 and UK deciding to leave the EU in June 2016. The EU, which fostered the dream of unified Europe for the past 60 years, has been undergoing quite a significant challenges because of the weakening of the economic growth rate, continuation of the unsettling type of the news in terms of the Grexit or Brexit or any type of the financial crisis we are seeing in various countries. So if there is any possibility of the breakup happening in regards to the United EU, that will be definitely negative news for the financial market. I don't think that's going to happen, but nevertheless, with the first case of the Britain coming out of the EU, people are watching quite keenly in regards to this aspect.
All right, Mr. Yu, got it. That's where we'll have to leave it today, though. Thanks so much for your insights, as always.
Thank you very much.